almost like all these complaints out there in the marketplace are so easily avoidable, just because it's and the struggle, if you're watching, is like, well, how do I know? That's where years of experience, client testimonials, the ability, the initial interview. Like, hey, come in and interview us, and you go through Josh's, fact-finding meeting for a listing or for the buyer side, a buyer presentation, or our Smart Start meeting. There's no obligation. You don't have like 45 minutes of my time.
There's also like a new agent that's done 4 deals. It just isn't going to negotiate the same as me.
Right.
I've been in the business for almost 15 years. We work with a lot of families. No, it's just one of those.
No, you got trophies. They're just behind this brick wall.
Yeah, it's just one of those things, though, that the more you negotiate, the better you are at negotiating, and the more nuances you see, the more angles you can work.
Sure.
Across the board.
Well, it's funny.
The more it happens.
It's funny. The same thing goes on the lending side. Lending rules are changing all the time, but we're kind of going back to when I was in the business. When you have an ability to negotiate with an underwriter, or you have the ability to kind of look at a deal. And on the lending side, being able to, when you're presenting to a listing agent, hey, my client is more pre-approved than the other client making an offer. So I think some of it is like when I find that clients in our world, if a client says, oh, I'm working with this banker and here's his estimate, like if they send it over, I can look at the guy's MLS number.
And tell how long he's had his...
Yeah, you can see his job history. And there's literally times where it's like, it shows their actual job history in the job data bank. And like 2017, it was like server at Applebee's. Yeah. 2018, mortgage lender, Loan Depot, or wherever, some company.
Yeah.
You can get that. So the bottom line is Quicken Loans, okay? Yeah. So the bottom line is you can see that this person has not been a lender that long. And you're like, okay, so are you actually getting advice from this person, or is it just they gave you a rate over the phone?
Apples to apples.
Well, they gave you a rate. They said, hey, your loan's approved, but is there anything else that you're missing?
It's also not apples to apples if you're talking to one lender, today, and the next one you interview 2 weeks from now. Well, the rates probably aren't going to be the same.
Right. Well, you can't lock
fees and everything's. It's all different stuff. So switch gears. What do you think the 2 or 3 things that consumers need to know as far as consumers meaning buyers and or sellers that have to be buyers after they sell? Like, what are the 2 or 3 things that you see that they don't know that they should know?
God, good question. All right, so one thing is definitely credit score, your actual mortgage credit score versus whatever.
So stop real quick. So we had one guy. So credit score being number 1, we had a guy recently that didn't realize he had a not so good credit score.
Yeah.
And makes very good money, but just didn't realize there were some outstanding things on his credit, and ultimately he had to push back his home buying 3 to 6 months because he's got 50 to 100 points he needs.
So a lot of people say, okay, my score is this, and they get a statement from Visa. Now credit scoring has been so diluted that you're getting scores from your bank statement, from your Visa statement, and what it is it's a consumer-based score. The actual models, the 3 repositories, and the computer models that score a mortgage credit score, which is why credit scoring was invented. Fannie, go back, to the mid-'80s. No, but here's the thing. Credit scoring was invented by Fannie Mae and the Banking Association to make underwriting automated. They didn't want a human making the decision. Flash forward, there's car credit scores, there's consumer credit scores. They're not mortgage credit scores. So number one thing I'd say to your question is when you know your mortgage credit scores, that'll dictate your rates, your terms, your mortgage insurance, which products. That's like critical.
Okay. Number 2.
Sure. Number 2 would be, in my opinion, most people don't talk about their money other than at critical times in their life unless they have a financial advisor who is in their life making them get uncomfortable about their money. So you have these people that have, let's say, people that are listing.
Well, it's historically taboo to talk about.
So they both have jobs. They have a 401k. They got some money here. They got some money there. They're getting ready to sell this house. And so the mindset is, oh, we're going to take all this money and do this, and if we don't sell for this, we can't do this. I think that, or if you're a first timer, they don't know, okay, I've got this money, and until I get to this savings number to put down X, because that's what I read online on some article, those knowing, having a knowledgeable person that can say, hey, even on like a glass board, here's your finances, tell me, I'm going to ask you 10 to 15 questions. I'm going to ask you what's important over maybe the next 5 years. Then what? Then it starts to, like, to me, you go back to like experience. To me, I've had thousands of those meetings. Once they tell me, or once I discover a couple things that are the motivators, I quickly know. It's almost like the answer immediately is, well, guys, you don't have to put down 20%. Or you could borrow the money from your 401k. It's not taboo. Or you could put down less and pay off these 3 debts that cost you $1,500 a month, and they'd be gone. And then there's this aha. So I think it's really kind of could that conversation take about 15 minutes if someone was really willing to answer the questions? It's yes. It doesn't have to take an hour. So if you did that second after knowing your credit scores first, I think it gets clearer.